Launching spaceships and building electric vehicles has helped Elon Musk become the world's richest person. He's also developed a huge fan following. He need only mention a stock and thousands of investors will rush to buy it. That's exactly what's happening to video game retailer GameStop after Musk tweeted about a coordinated attack against short sellers of the stock on Tuesday.
What it's to do with is what's known as a short squeeze, where you have professional hedge fund investors. They sell shares that they borrow from somebody in the view that they will go down. And then if they do go down, they look to buy them back and lock in their profit. What retail investors have done here is say, A, we actually just like GameStop as a company. B, we don't like you professional hedge funds just profiting from companies' misfortunes. So we're going to start buying the shares. We're going to drive the share price higher.
But analysts say the ensuing rally in the share price is unwarranted and unsustainable.
It's very reminiscent of 1999 and the dot-com era, because does GameStop really have a valuation of $160 a share per stock, or $100? Absolutely not.
Musk's tweets have sent other stocks surging too. Earlier this month, he shared a meme of an anime character developed by Tokyo-based toy and game maker Bandai Namco. The company's stock surged nearly 5%. And when he recommended that people should use the messaging app Signal, a buying frenzy drove up the stock price of a medical device maker with a similar name, Signal Advance. The rally didn't stop even after the company's CEO clarified it has nothing to do with social media.
We strongly recommend people do their due diligence and always invest with care. Signal Advance doesn't have an association with Musk or the Signal app.
Musk was reprimanded by the Securities and Exchange Commission for commenting on the stock prices of his own companies. But it's his tweets about other firms that could end up costing some of his most ardent followers a fortune. Mobin Nasir, TRT World.
For more on this, Santosh Rao joins us now from Princeton in New Jersey. He's the head of research at Manhattan Venture Partners. Welcome back to the program, Santosh. Now, let's talk first about the phenomenon surrounding GameStop. It's a company that few outside of the US would have really heard of, but now, as we know, it's the talk of the town, not only in Wall Street, but across the globe. I just looked at the share price now. It hit a high of $380 today. Fast rewind a year ago, and it was really at a low of $2.57 per share. What's behind this? Shed some more light about this frenzied trading that we're seeing.
Sure. So I think we need to look at this whole thing at two layers. One is the basic fundamentals. At the basic layer, you have the trading dynamics where short squeeze and supply demand, and that goes on all the time. The companies get squeezed and the stock price goes up. And that's been happening for a long time and all that. But here, I think what's driving this whole thing is a new phenomena driven partly by this COVID and stay at home and the new retail cohort out there. So you have a gamification of the stock market, essentially. The fundamentals are totally detached from the valuations. It's just the disparity, it's disproportionate, the variance between actual value and the valuations. So I think that's the whole gamifications. You have the new retail guy who's more sophisticated, who's out there, who has access to technology, and the asymmetry that we had in the past about information, he doesn't have that. Now everybody has same access. So I think all that is playing into this whole thing and that's driving this up. And it doesn't help that Elon Musk and all these influencers are in there. So there are going to be people who are going to get hurt, like they always do. Someone's going to be there holding the bag in the end, and it'll go on for a while. So it's a moment of reckoning for the regulators. Maybe put more guardrails, more circuit breakers. They need to look at all these things. But this thing has really highlighted the fact that the stock market has been gamified.
Yes, now this extreme short squeeze that we're currently seeing on GameStop stock seems to be really sparked by this Reddit subpage called Wall Street Bets. Now, just reading a couple of their posts, a lot of them really basically want to stick it to the traditional Wall Street traders, the hedge funds, who are effectively betting against this stock. What do you think of this practice? I mean, you mentioned that it's become more of a game now, but at what point do you think regulators like the SEC will have to step in and somehow put in some stops against such frenzied trading, which isn't illegal right now, is it?
No, it's not. And to some extent, there has been, you can call it some coordination, even in the hedge fund community. There is that group mentality. This is something new, the social media aspect of it, people getting together. We've had cases where you had closed room teams and groups, they discuss and they come together as groups and they buy and sell. So all that has been going on at some level. This is just highlighted because of this social media thing and this GameStop, which is really coming out there. So, and this Bitcoin phenomena, and there's a sense that you're missing out on so many things, that someone's taking advantage of this and you're being left out. So, and the retail investor feels that the Wall Street has been the beneficiary of this whole unfair system, and they want to really fight back to some extent, and they feel they're justified in doing that. So I don't think there's anything illegal about it, but the regulators can come in and maybe put circuit breakers after hours, before hours, not just during regular hours, and just highlight the risks out there. And someone's going to get hurt, like I said earlier, but it's nothing illegal here. Yes. Valuations are wrong. The stocks should not be there. The company is not that good, doesn't have any viable product. It's just really a technology of the past or a business of the past. But retail investors have to realize that, and they will painfully at some point. But right now, there's a momentum play going on, this whole gamification, like I said. So let's see where it ends. But it's definitely a moment of reckoning to kind of sharpen the guardrails around this market.
It sure is, and just to highlight the absurdity of what's going on, when I checked the closing price yesterday, it valued the company at around $10 billion. It's now worth almost $25 billion. So that's just insane, isn't it? Santosh Rao, thank you again for joining us from New Jersey.
Thank you.